right, ladies and gents, come out from the cold waiting room and into the warmth of the webinar. Just double check all the technology is working okay. We're on the audio, got a screen share going. We'll get started in a couple of minutes. You're very welcome here. We scan in the markets. Before we get started with the topic du jour, Nasdaq just struggling a bit to get any traction today, right? Just sitting around. Sold off immediately. The opening bell's been sitting around at Friday's close. S&P 500 coiling for a couple of days, exclude yesterday's half day. Gold just been monstering. Nothing's been able to stop gold. Thank you, Dirk, for the feedback. You can hear me and see me. As always, I don't think I've ever done it yet where I've gone through a webinar, touch wood, where I've gone through a webinar and no one's been able to hear me or see me. I might have muted myself by accident a couple of times, but apart from that, we've got away with it. So yeah, thank you for the feedback, ladies and gents. We'll get started here in a 1 minute sharp. I'm just glancing at other screens here just to see what's been going. Yeah, Nasdaq, you know what? I don't know how many Nasdaq trades we got on here, but it was an interesting open. We kind of sold off hard. I say hard. It just never really found that much of a bid. Listen, we're at all-time highs or as good as. There's nothing bearish about it, but it's a slight subtle difference in intraday price action. Doesn't mean anything, but it's just curious to watch. We're still very bullish, regardless of what you think of anything. The price is at all-time highs or near all-time highs. It's as simple as that, isn't it? You don't want to be getting too aggressive with your shorts, A to B type trades, if that's your thing. What else we've got? Obviously, gold just ripping and ripping and ripping. That seems to be a one-way street after that little flush red of the day. Crude oil got a bit of a bid. The crypto gang, what are you guys up to? I haven't looked at crypto for a while. Not doing much. Oscillating around that 100,000. Seems like a bit of a pivot up and down, up and down. And the currencies are a bit quiet today. Cable still holding that bid from last week. All right. Anyway, regardless of that, we're not here to study the market conditions today. We're here to break the cycle of overtrading and impulsive decisions. Yes, UK 100. Thank you, RA Russell. That's an interesting one. And DAX. Anyway, so today, welcome, ladies and gents. I'll introduce myself in a moment, but let's remind you why you're here. And you're like, am I on the right webinar here? I expected something else, but let's just double check you're here for the right reasons. You're here because you are a trader. You've probably got some experience in the markets and you think to yourself, you know what? I overtrade. You put your hands up, you look in the mirror and you go, I need to fix that damn thing. I can't keep doing what I'm doing and expect different results. We'll know Einstein's definition of insanity, don't we? Doing the same thing, expecting different results. And overtrading is a huge, huge nemesis for so many traders out there. So my effort or my attempt, it's not an attempt. It's going to be I'm going to do a good job. Let's think positively. I'm going to give you the tools you need to help you fix your overtrading. Of course, you've got to do the work, but I hope it helps you think a little bit differently, helps you look at things through a different lens. Maybe some things you've heard of before, but maybe you're going to hear and see things. You go, you know what? That resonates with me. Thank you, Mark. I'm going to use that. And you take it for yourself. You deploy it in your own trading with your own style, your own strategy, your own personality. And you say, that helps me resolve this overtrading and impulsive decision cycle because it's horrible. I've been there, guys. I started in 2003, trading 2001, I guess, 2003 properly. It's just a common thing, right? You just want to trade, you enjoy it. We'll get into all that in a moment. We'll talk about all the kind of dopamine stuff. We'll talk about ideas. And the main thing, I'm going to give you some tactics. I'm going to talk about theory and fluff. I want to give you actual tactics you can take away today at the end of this in 45 minutes time or so. We'll do a 15-minute Q&A at the end. You can go, yeah, you know what? I'm going to deploy that. And I'm going to see how that impacts my trading. Great quote here from Wyckoff. The overtrader is his own worst enemy. He is constantly jumping in and out of the market, frittering away his capital in commissions and losses instead of waiting for the high probability trades. That is that one there. Studies in tape reading, the little green one there. I would try and grab it, but I'll just pull everything off. And that'll be a great start to things. Very cool book, written in the 1910, actually. Believe it or not, it was written in 1910, republished in 1924. And that's just a new copy. You get it for pennies on Amazon. Although if anyone knows of a first edition, I'd love to get my hands on a first edition. Anyway, before we push on and before I kind of formally introduce myself, those of you who don't know me, I must do this. Please understand that spread bets, CFD trading are super risky. Hopefully you know this already. Hopefully you understand the risks involved with trading with leverage. It works very, very nicely, doesn't it, when things are going your way? And it's very, very unpleasant when things are not. So you must deploy risk management strategies. You can't de-risk anything completely, but that's the game we're playing. So please understand, what you're trading, understand how leverage works, understand how the products work that you trade, whatever you choose to trade, whatever instrument you trade, use the demo accounts first before you kind of get into the thick of risking money. And of course, please, 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 I hate hearing stories where people lose more than they wanted. Now, no one wants to lose. We don't do this to lose, but this is the nature of the beast, right? And so baby steps, baby steps, baby steps. Understand the risks, recognize that it's a tricky business. And once you accept that, you put it behind you, say, okay, I'm going to move forward. My objective is to get to this level. It's not going to be a plain linear growth. But that's my objective. So anyway, please understand the risks involved with trading, spread bets, CFDs, etc. Okay, with that out of the way, let me remind you, if I may, before we get to think of it, I won't spend ages on this, I promise. But just to introduce myself, my name is Mark Holstead. I have pretty decent experience in the markets, but I don't pretend to have all the answers, unlike other people who claim to have some magic pill that you can have, or some instrument you can use, or some instrument you can use, some strategy you can trade, let's say, or some tool you could use, probably better. That's not the real world, right, guys? I've been trading for a couple of decades. Market's been kind to me, but I don't stand here and say I know everything, but I'm here to share with you thoughts and ideas that I think are going to be helpful to you. And also in a unique position that I run a trading community called Traders Mastermind. We've been running this for a long time now. Feels like a long time now. We've had traders come up through the ranks, had traders fall by the wayside. So I get to see kind of from a bird's eye view how different traders overcome challenges. And that puts me in a quite unique position from my own experience and from my experience, working and seeing other traders progress. I can kind of share those things with you, the good and the bad. And hopefully that gives you not just one person's experience and thoughts, but also, because everyone's different, right? Everyone's approaching things from a different perspective. Everyone's approaching different markets, trading different timeframes, all that other stuff. There's multiple permutations of trading. So that's where I come from. And hopefully that's how I give value to you. So this is a webinar series we've got with Pepperstone at the moment. We are doing this week, we are talking about overtrading, reducing that cycle. Last week, we talked about 7 discipline mistakes that kill confidence. And I'm going to take one slide from that. I've adjusted it a little bit because it's such an important one, and repeat it. Okay, so, and next week I'll share with you in a moment what we're going to talk about. So things take time. Implement a change. If you like something and you hear something that you think I'm going to use myself, then just take some time and just pause and go, hang on a second. Do you know what? I'm going to implement that in my trading. I'm going to try that in my trading and give it some time. Because how many times I'm going to go off piece here in a moment. I do this from time to time. So forgive me, but I like trading. I'm passionate about trading. I'm a trader. You're a trader. You don't mind. You'll let me off. But you know what it's like. You get all fired up the weekend maybe, or after the markets close, you webinar, you're writing down stuff, you got this thing, you're ready to go, and then you deploy it the next day, it doesn't work and you throw it away. Like, things take time. So if you see something you want to deploy into your trading, a methodology, a structure, a different way of thinking, take it, put it in and run with it for a bit, then audit the performance of that and how it's improved your trading or not before you kind of decide to bin it off. So observe the results for a while and then make some course corrections. And by the way, I should remind you, if you're new here, you're very welcome here. If you've been here before, you know the score. Talk for about 45 minutes or so, and then have some chance for the Q&A at the end. If I can help you, absolutely will. If I can't, I will probably be able to direct you to somewhere or some resource that can. Like I say, I don't stand there going, I know everything. I got a reasonable knowledge, as you would expect from a couple of decades in the markets. But there are people who maybe are more knowledgeable about certain aspects than me, and I can certainly point you in that direction. Okay, so what we're going to learn today. Number one, the real reason that traders overtrade, I think it's deeper than FOMO myself, the impulse filter technique to stop those reckless trades. Why these boredom and small losses trigger overtrading, how to stop the spiral. That's a really good one. That a simple challenge you can do to rewire your discipline. It's tough, but if you stick it out, it works. How to shift from that quantity of just trading, to really good high quality trades. Now, we don't know, I'm not here to say you know the result and the outcome of each individual trade before you take it. Wouldn't that be nice? Yes, this one's going to be a profitable trade. Okay, well, I'll have full margin, full everything on it, but that's not the way it works. We never know, but we can distinguish between the high quality trade from a poor quality, impulsive, choppy, those grubby trades that you just take and you go, why the hell have I even bothered with that? What a waste of time and resources. So trying to do that. And I've got a 2-minute pause rule that I want to share with you that forces you, aggressive, forces you. It helps you slow down and trade smarter. No forcing going on here, but it helps you just to calm things down, dial things down a little bit, and just look at things from a different perspective, and just avoid some of those big challenges that we all deal with. Because you probably know, right? The overtrading, if you could just reduce it by a little bit, it would probably impact your bottom line quite dramatically. So many traders I know watching this now are probably in the early developing stages. Maybe you are struggling a little bit to get any traction. So this will help you reduce that damage and hopefully get you to turn the corner and say, hey, listen, if I can just eliminate a lot of these overtrading and these poor trades, I'm going to be in a much better position. And others of you I know who are just about to kind of get over that hump, if you like, this might be the one thing that kind of moves you forward this quarter or next quarter, whatever you try to deploy this and go, you know what, actually, I've reduced some of these really, really silly days, silly weeks, damage that I didn't need to do. And actually, that's really impacted me and my bottom line for the better. Okay, so whoops, one slide too many. So why overtrading is the silent account killer? And by the way, listen, I know you've heard a lot of this stuff before. I know you've read Douglas. I know you've read Steve Ward's books, Bulletproof Trader. Is he up there? Might be. I know you've read Brett Steenbarger, listened to Louise Non-Wheeler's meditations and all this kind of stuff, these trading psychologists. So, but I'm here to put it a little different, a spin on things, or a little different lens to look through, because I kind of take the psychology stuff on board, as I have done. I remember ordering back in the early 2000s. Internet was, I'm not gonna say there was no internet. It was just creaking on you. Those of you guys there know it was, online trading was just about there. I remember ordering DVDs to try to visualize becoming a more disciplined trader, and they came from the US. No, sort of DVDs, sorry, CDs even. And these CDs came in the post, and I was like playing them every night and stuff. Fortunately, we have more resources than that now, but it's a nemesis for everybody. And just like Wyckoff said, who was trading in the 30s, it's always going to be there. It's human nature. Listen, it's a silent account killer, and we don't realize it. It's like the boiling frog. You put the frog in water, you turn the temperature up, it boils to death, or something like that. Is that right? Pretty sure it is. But you put it straight in boiling water, he hops out. Don't try this at home, folks. Overtrading just drains the confidence, capital, and focus. And more trades does not equal more profits. That's the thing I think the disconnect and the problem we have as traders, or when you're coming into trading, because we're so used to exchanging time for money. We think, well, I should be in a trade. I should be trading, right? I'm sitting in front of my desk. And many of you are part-time traders. Many of you don't have the luxury. It is a luxury to be able to sit and select the times when you want to get involved, sit through chop or whatever. You've got other commitments, and even if you're whatever those commitments might be, whether it's work, whether it's family, whatever, you sometimes sit there and go, well, I need to trade now. I need to do something. And so maybe a consideration is to say, hang on a second, how do I reduce the number of trades? And honestly, I had this discussion with a trader, a couple of traders actually last night. A couple of friends of mine, traders, went out for a curry. Wasn't a great curry, that's by the by. However, we were discussing, like, what's the biggest thing we see traders and the newer traders is, it's just over trading. If you can just reduce the number of trades, I almost promise you, I can never promise anything in trading, but it's as close to being to a promise as I can without saying I promise that it will improve your results. So it's worth trying to get on top of this. So the question for you is really, how many times have you traded today? You don't have to reply in here, you don't have to put anything in. You just think, how many times have you traded today? And what's normal? What do you expect to trade? What would you really like to trade? So imagine how many times you trade. Imagine how many of those were really substandard trades. If you have traded today, maybe use tomorrow or yesterday, know, half a day, Friday, Thursday, whatever. And how many, really, I think is the sweet spot. There's a sweet spot probably for you somewhere. Okay, so the psychology behind overtrading, because it's all very well me standing here and going, no, no, don't overtrade. You know how bad overtrading is. And you're going, yes, 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 Mark, I've heard it. Yes, yes, thank you so much. What a genius. Oh, I'm wasting my time. No, no, no. Yeah, I get it, right? We know it, but it's how to implement something to stop it is the issue, right? It's all very well knowing something. And maybe you tried some stuff, and hopefully you're going to find some things here that you've not heard of before that can help you crack this nut once and for all. So, it's not just about FOMO. It's this habit loop, and the bad news is that once we start doing it, we reinforce it, reinforce it, reinforce it. And actually, if you've started trading and not realizing that the kind of the downside of overtrading or the nemesis of overtrading, you kind of reinforce that habit. Now, good news is you can break it, and there are tricks, yes, tricks and tactics. That was the word tricks and tactic together. Then tactics to help you break the cycle. But if you think about how you do this or how you overtrade, now many traders trade because they like the dopamine hit. And you've got to be honest with yourself. You've got to say, do I just enjoy clicking the button and being in a deal? That's probably not going to serve you over time. I mean, I love trading, right? I of course, why would I be doing it for this long? You love trading, but we've got to find love. And I think I mentioned this um, in one of my daily emails I do. If you go to tradersmastermind.com, I send out a free daily email to help you with things like this. And one of the things I said was, you've got to love the process, like love the research, love the journeying, love all the stuff that comes with it, as opposed to the click and, oh, I'm going to win, I'm going to lose. That's almost on that gambling side. I know it's not quite there, but it almost is. You've got to make sure that you're not getting a dopamine rush from clicking the button too much, and you're only clicking the button and taking the trade, taking the deal when it aligns with your trading plan. Another topic completely. We'll cover that at some point. Don't worry. So the cycle of regret. You know how bad you feel when you overtrade. You break your risk rules. You do this. You do that. You take a trade that's outside of your trading plan. You feel pretty crappy for it, and it just creates more overtrading, more regret. You go in. You go, why can't I stick to the rules? Why do I keep hesitating? Why do I do this? Why do I do that? And it's a vicious circle. And ultimately, I tell you what happens, and we know what happens is at some point we crack. The regret is too much, the frustration is too much, the anger is too much, whatever those negative emotions are. And we go on tilt, we do something silly, we trade at big size, we hold a trade overnight that we didn't want to, we take on gap risk over CPI or whatever it might be, and then end up doing massive damage. So we don't want to do that. We don't want to get into the cycle of regret. So here are some common overtrading triggers. And then why I bring these up is I'd like you to identify your personal trigger. You're not me. You're not the trader next to you, not like any of the others on here. You trade in your own way, your own style, your own strategy, your own your own market. We don't have our own market, but you trade a market that's you like to trade, the style you like to trade, and you think about things differently than I do, and you think about things differently than the trader next to you does. And that's good, because that's how we become great at trading, as we use our personality as our edge to help us evolve and look at the market through a different lens to others. Okay, so some of the common overtrading triggers. Number one is boredom trading. And that's just because if the market's quiet, you're sitting there and you feel like you need to do something, right? You feel like you need to do something. You come into the market's not doing much, and you just click a button, you go, I think it's going up. And I'm going to get to this in a moment. I don't want to jump the gun, but that's how we stop it. We say to ourselves, hey, listen, what's my process? Like, my formal process might be I watch my filters, my triggers, I take the trade, I look at my risk. But the actual process you take in the heat of the moment might well be I have an impulsive decision or impulsive thesis, if you like. I think the market's moving higher. And then what happens is you reinforce that by finding information to validate that. Yeah, but look at the green candle. And yeah, we're in a bull market. And yeah. You quickly do that. And then before you know it, you rush to take the trade before you've had even time to consider. I've got a tool and a tactic to help you resolve that later on. I don't want to kind of jump ahead of myself too much, but that's what's going on in your mind. And if you think about how you trade out of boredom, that's exactly what happens. You spot something, you have an idea, you have an opinion, but you reinforce that opinion very quickly with other things. The moving average, the stochastic, this, that. Elon Musk's basically running the country. This is definitely going high, whatever it might be. And you get involved with a trade which you had no business doing. Revenge trading, trying to get back losses. Obviously, intraday, if you're down intraday, you won't. And again, this is the feeling you get when you're in drawdown, or the feeling you get when you are in the red. You don't like it, right? So your subconscious says, I don't like this feeling. How do I get rid of it? I feel pretty crappy. And it goes, oh, I know how to do that. I'll just need to take a trade with some bigger size and I'll feel good again because I'll have a green day and I'll feel very, very good. And so there's a solution, click. And of course, maybe you get lucky, which just reinforces that bad habit. But most of the time, that's not going to work out. You lose even more, you feel even worse. And if you're not careful, you get the death spiral, right? So revenge trading is a common thing that helps you, that forces you to earn and force you, and help you and force you, encourages. That's the word I'm looking for, guys. Encourages over trading. Okay, fear of missing out. We know this one, FOMO, classic, the urge to be in every move. And again, you need to find your trigger. For some people, you might be sitting there shaking your head, going, "No, I don't care. I never revenge trade. That's fine. I was a revenge trader. I was a bad revenge trader. Like if I had a loss and I felt well, that's not fair. I shouldn't have been stopped out by that. I got stopped out to a ticker. I need to get that back. How dare you?" It's an awful place to be. Maybe that's you. Maybe you're sitting there going, "Yep," or maybe you're going, "No." That's okay. But you identify your personal trigger. Fear of missing out. Obviously, you see a move, you want to get in. Maybe you're a good boy or girl and go, I'm not going to get in it. It spikes up and you can't take it anymore. You dive in. Of course, that's the top. It reverses. You don't really got stop structure. You hold it, you add to the trade. You know how the story goes. We've probably all been there at some point or another. And the final one, which is a bit of a different one, which I don't think is talked about enough, and it's quite a new thing, really, the pressure to perform. So obviously, social media, being as prevalent as it is, and many traders are, looking for interesting videos on YouTube. You may be following people on Twitter or X or Instagram or wherever it might be, and maybe it's for part entertainment, part knowledge, part whatever the hell, doesn't matter. Sometimes you're going to see people who are sharing really good performance, really great ways of trading, and really good numbers and all this type of stuff. Now, let's put to one side the very valid question of is that legitimate or not. But let's assume, let's put that to one side and say assume that they're experienced trader, they're doing well. You don't know what their account size is. You don't know how long they've been trading. Comparing yourself to somebody who's been trading multiple decades with a very chunky account and a lot of experience, their P&L it really doesn't put the right sort of pressure in. Now some people find that motivational, but I think deep down a lot of people go, oh, well, then why am I struggling? Why can't I even put together a string of 3 or 4 winning days when I see this person putting up these numbers? So just be careful about that. That's something I don't think is discussed enough. And feeling like you're behind the curve, or feeling like you're not performing as well as you should do. It's okay to have a bit of drive, right? Driven, push forward, push forward. But I heard an analogy many years ago. I forget the name of the trader, and he talked about this bamboo analogy, right? And Chinese bamboo, seed under the ground in the soil, and you water it and you water it and you water it, and nothing happens for months, I think it is, maybe even years, right? Nothing happens. You water it, water it, water it, water it. And then eventually, when it comes out the ground, it grows at a massive rate of knots, right? Just boom. And that's very similar, I think, with trading, is that you put the work in, you water it, you put the work in, you nurture it, nothing, you see nothing. Maybe your equity curve is going lower, stagnating, you don't see any output. And then all of a sudden things click, things start to work, and you get the Chinese bamboo type thing. So I thought it's a great analogy for trading because you don't know when things are going to fall into place and you start to work for you. There's a lot of things to do in trading. Appreciate there's a lot of moving parts that need adjusting. But often there is a breakthrough. And when I see traders coming through the ranks, so to speak, it is exactly that. Struggle, struggle, struggle. Man, I've unlocked something. Had a good quarter, a good year, 2 good years, 3 good years. And it just can sometimes change. So don't worry about what others are doing. Focus on your job, your main challenge, identify your personal trigger or your challenge, whatever it might be in trading, and relentlessly pursue that. Okay, so And then we go, okay, I'll speed up a little bit. How boredom leads to bad trades. So traders with a plan trade less and better. And one thing I guess I should have said really before I kind of went down this, the intricacies and going upstream a bit is obviously, I hope it's obvious that if you don't have a plan, you don't know if you're overtrading, right? If you're trading without a plan, and by the way, I know some people go, "Oh, plan, I can't." I urge you just to do something. Literally, pen and paper, write down. I wait for this, this, and this. It doesn't have to be massive at the moment. You can always build on it. So, putting that to one side for a moment, if you don't have a plan, you don't know what's overtrading, right? Like, well, am I overtrading? Am I not? Maybe your plan says you should be taking 100 trades a day. I'm guessing it doesn't, and there's not many traders who should be doing that, if I'm honest. But if you don't know what you're supposed to be doing, you've got no benchmark to rate it against. So just start with a structured plan. There's not a webinar on trading plan. It's a whole can of worms that I'm trying hard not to crack open, get those kind of worms down. But a plan, have a plan, right? Avoiding the boredom trap. So we've all been there, and you often convince yourself it's just a quick scalp. I'll just make a little bit from this. It's a layup trade. It's an easy trade. I don't even think about it. I'm just going to buy this bid. I'm going to buy this bid in the market, ride the momentum, take the breakout, take a few points, take a few pips. I'll be happy. And you just take absolute crap trades. And we've all been there and done it. We just want to eliminate it. It's not acting in the way we want to act, is it? We know this. So just fight the urge. If you are sitting there and you find yourself bored, do something else. Very, very, step away from the market. At the very least, minimize your broker platform so you can't do any damage. Just be aware of how you're feeling. And a good fix is to have a pre-market routine to set intentionality. So I'm going to trade to this time. And after this time, generally, I know I might get bored. I know the market tends to chop about. I don't want to get caught in chop and slop. I'm done for the day, or I'm going to walk away. I'm going to use that time to get a walk, get a gym session, whatever it might be, and try and break up that day a bit, because we've all taken a trade we shouldn't have out of boredom, and it's ended in tears, or it's ended up being the catalyst for bad, bad, bad trading. Don't get involved in it. Be the bigger trader. Step up and say, no, I'm just not getting involved in this stuff. Okay, revenge trading. So this is emotional decision making spirals into big losses, right? And this is a complex thing, and I'll just touch on this for a moment because I don't want to labor the point too much. But you have to think, you know, often revenge trading can come from one loss in a day. So you've taken a trade, you've been stopped out, that's frustrated you, you want to get it back. You might not actively think, I want revenge, but you probably want to feel how you did earlier on. And it's always amplified when you were big up big green on the day, or up decent green on the day. Whatever that number is to you, you give it back. You felt good. You were like, oh, I feel good for today. You give a chunk back. You hate how you feel. And so you trade to try to get back to that feeling. That's always what it is. The high watermark, you felt good. You want to have that feeling back because the distance is I'm feeling neutral. I feel great. I feel crap. You want to come back to that point. So the kind of the amplitude is doubled. So there's that. There's also if your current performance hasn't been what you want, and you hate the way that feels. You don't like looking at the equity curve. You don't like looking at P&L. And you think the way that I will like it and the way that will make me feel good is if I have a trade or two trades and boost my equity curve back to where it was. Maybe it's a round number. Maybe it's a nut you're trying to crack in terms of P&L or account balance. We've all been there. And why can't I get over this level? I seem to get to this point and give it all back. There's a trick for that, but that's another topic for another day. So you think about why you do this, and sometimes it's kind of it's the final straw that breaks the camel's back. If your equity curve has been declining, maybe performance last year wasn't so great, previous years hasn't been what you'd wanted. At some point, you just go, oh, I just want to make some money, and so you get that revenge trading. You've got to avoid it all because it's so dangerous. You can't win. If it works, you just reinforce that bad decision making, bad habit. If it doesn't work, life just gets worse for you, right? Walk away. If we're talking about revenge trading intraday, just have a walk away rule. Just say I'm done for the day. And if you find yourself revenge trading, have a loss limit, have a maximum drawdown. You decide on those things before you start the trading day. Even a high watermark where you say, "Hey, I'm up X. I won't give back more than 50% once I breach that." So let's say you're up 4R and 4R is your high watermark, whatever R is Q and R is a multiple of your risk. So I'm up that. I won't give back more than 3R sake. I don't want to go into red. And then you kind of move that kind of trailing stop loss, if you like, on your intraday performance or weekly performance or quarterly or even yearly. You can use it how you want if you know that that coming back triggers your revenge trading. Okay, so let's talk about this impulse filter technique. So, recognize the impulse. What is the impulse, right? If we go back to those impulses you had here, what is it boredom? Is it revenge trading? There's more, but this is an example of you recognize what it is for you. And I know we reiterate this a lot, but trading is very personal. You have to answer that question yourself. You have to look yourself in the mirror and say, what is the impulse, man? What is it that causes me to overtrade? And why? And just be a kid. Why? Why? And find out why. Because until you can find out why, you can't solve Forex. We're entrepreneurs. Traders is an entrepreneurial venture, right? You're taking on risk. It's very different, obviously, to starting a business or growing an electric car company. I've used Elon Musk twice now, and this whoever it might be. Mike Ashley says Sports Direct and Fraser, whatever. You're taking on risk, and you have to solve for X, but you have to know what the LX is before you can solve for it. Otherwise, you're deploying a fix that is really just probably going to be ineffective. It's not going to work for you. So really recognize your impulse. What is it? Why do you overtrade? And ask yourself, hey, does this fit in my plan? When you're in the trade, does the trade fit in my plan? It's a very simple question to ask. Wait for the confirmation. I use a filter and trigger system. Maybe you do the same. It's like, hey, my filters, I need to see this and this. My trigger is this, a close above here, or whatever it might be. And if it doesn't, just get out of there. Give yourself, make your life easy on yourself. The analogy I often say is, if you're trying to lose weight, right? You're like, you know what? I got a bit chunky over Christmas. I could do losing a few pounds. The last thing you do is sit there with a massive bar of chocolate or a chocolate cake or a pint of beer or pizza, whatever your nemesis is, and just look at it and go, no, 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 no. You don't, do you? Because it's just making life hard for yourself. You're not going to do it. You just try not to have the stuff around the house. You try not to get yourself in a situation like if you're just trying to stop drinking and you're not going to go down to the pub and just take yourself out of positions, situations. Same with trading. Or if you find yourself boredom trading, get out of the market when it's likely to be choppy. Lunchtime, free data, other times you know this as well as I do. You just remove yourself from the situation. And if you feel that urge, step away. You don't have to like raw dog and go, oh, I've got to sort of stare at the market and watch every tick and make myself not trade. Like I'm just going to starve myself for a day and then put like a massive pizza in front of you or a burger and you're trying to lose weight and you look at it and go, why play the game on hard mode? You don't need to. Okay. All right. Let's talk about the trade limit challenge. So think about limiting yourself to 3 good trades a session. Could be 2, could be 3, whatever's personal to you. Just have a limit. And this is uncomfortable, right? I've set traders this challenge before and they've been like, this is tough, man. I hate the fact that I've not got unlimited bullets. But what it does is it forces you to be selective and it forces you to think, do I really want this trade? It forces you to pause. Very often the thought process goes, trade, trade. And you want to put that circuit breaker in that goes, whoa, 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 easy, easy. Is this really the trade I want to take? Now, the kind of subconscious is going to be there's an objection to that. Objection, Your Honor, objection. But if I stop and think about the trade, I'm going to miss that beautiful trade. You might miss 1 or 2, but that trade-off is well worth it because the ones that will stop the trades that it stops you taking, the impulsive trades it stops you taking, is going to be way, way more than the occasional trade you miss because you stopped and paused and thought about it for a few minutes or a few seconds even. And just stopping that decision from going idea to deal. No. Think the steps. Do I really want to take the trade? Do I really want to take the trade? And when you have a trade limit challenge, you limit yourself to number of trades, then it does help you. It does help you a lot. Okay, so and track your progress over time. This is the way to do it. How do I perform with this? Do it for a week and then see, hey, how do I get on with a trade limit? And by the way, those of you who haven't already got this, I know many of you have this free discipline tracker. I had built for Google Sheets. So if you've got a Google account, you can download this. You can copy it for free. You go to tradersmastermind.com, and in the menu, if you select discipline tracker, you just enter your email, and then the next screen, or does it go by email? I can't remember where it does now, how it's been set up, but it'll give it to you. So you can just have it for yours. It's yours to keep. It's completely free. There's nothing, there's no catches here. I had this built, and it helps you kind of improve over time. It's pretty self-explanatory, but I have got to explain a video on the kind of page where you can download it that helps you improve this type of stuff. But use a pen and paper if you want to. It's not something you absolutely have to use, but I think it's very, very useful. So tracking the progress over time is a real unlock if you can. Okay, so let's move on. The 2-minute pause rule. Where is here it is, my trusty stopwatch timer. So I had this timer, and you don't need this, but I try to keep stuff off my phone. I don't want to be picking up my phone all the time. Before you decide to take a trade, bang, hit 2 minutes on this, right? You set a 2-minute timer, you hit it. And what you're doing there is you're just taking time to review the setup, go for your checklist, and then decide to pull the trigger or not. And that is similar to before, just putting a circuit breaker in the flow from, I see the trade, I'm going to take the trade, to click, boom. And this just helps you. Don't have to be this timer, of course. I think it was on Amazon for whatever it was, 7 quid or 10 quid, 15, who cares, right? But a timer of some sort, you can use an oven timer, an egg timer. And I don't recommend using the phone. It's one thing I would say. But you just have something you can quickly go, bang, right, 2 minutes. I'm not going to miss the trade. Let me just get that objection dealt with. If I miss it, so what? This is trying to get me to improve my overtrading. I need to fix it. So shush, don't tell me I'm going to miss the trade. Then you look at the trade, you review it, you go for your checklist. Am I below the VWAP? Am I this? Am I in the higher time frame lining up? Am I above the moving average? Whatever process you use, and you go, you know what? That's not the right trade. No, I need to see it come down a little bit more first. I need to see it touching that low. I need to see that pin bar. I need to see it above VWAP before I go, whatever it might be for you. Or you go, yeah, you know what? I'm ready to go. Okay, stop, target, click. Much more considered way to trade. And over time, by the way, you won't need 2 minutes. You need 30 seconds. So you can eliminate that objection of I'm going to miss something, I'm going to miss something if you're on a really lower time frame. Okay. And listen, you said really simple example. The other day, the DAX just ripped off, right? We had this opening range break type trade, just absolute rip to the highs. If you were just using a standard normal trade, you had your stop under that low, you got a nice 2R for not doing a lot of work. If you were taking punts at it, you took a quick profit, then you tried to fade the trade, you tried to do this, you got caught in chop. You could have had 10 random trades and you're down, however many are 10R, 15R, 3R. And why I say this is because I know we've all been there. I know you've been there. You've gone, you know what? If I just stuck to my damn plan and did what I said I was going to do, it would have been a great day. But instead, I tried to be smart. I took profits too early. Then I faded the move. Then I added to the trade. Then I got caught in a load of slop. And actually, the day is an awful day. Whereas in reality, if I'd just taken the trade I said I was going to trade and did what I said I was going to do, it would be a very, very easy, calm, relaxing, lovely, multiple R day. So just remind yourself of that. Just say, hey, there's a cost to it. Every time I overtrade, it's costing me money. I might not have to pay the price now, but I will have to pay the price in the future. And it might not show up in this trade being a loser, but it will over time because I know I don't have an edge when I'm trading outside of my setup or plan. And if I do believe I have, what am I even doing setting a plan? Why don't I just punt and shoot from the hip? You don't want to be doing that. Of course, you don't want to be doing that. You need some structure, some boundaries, some methodology to trade with so you can build your edge over time. Okay, so how do we build? How long we got? We've got a few minutes. How to build a no overtrading trading plan. Bit of a mouthful, but you get what I mean. Have a daily checklist to follow. How many max trades per session? Try that out. Honestly, you might be like, oh, I don't really want to do it, but just try it. And it will be uncomfortable. Here's what will happen. You would take, say you have 3 bullets, right? You would take one, maybe stopped out. You take another, maybe close early. You take another, and you go, oh, the best trade's setting up. I want to take this so much, but you can't. You have to restrict yourself. Now, do you have to trade like that forever with these shackles of multiple rules? No, no, no. But if you want to crack over trading, it just start to help you think differently. And it's uncomfortable at first. You're used to just trading when you want. You're used to just taking a trade when you see it. If you really want to fix something, you have to bathe in discomfort for a while. Trade triggers predefined, rules for stopping after losses or max drawdown, trading drawdowns on intraday or intra-week, and some sort of review process post-trade, right? And reviewing is so important. You know, if you review, and I mentioned this last time, you see things, and maybe you are quite an avid journaler and trade reviewer, which is great. You'll kind of nod along with me. If you're not, let me convince you in 10 seconds to do it. A little bit long. Give me 30 seconds, right? When you don't have the burden and the pressure of performance, i.e., trading to make money, you are able to look at things through a different lens. You sit from a different perspective. You look at things from a bird's eye view, and you're able to go, that wasn't really a trade I should have taken. That I should have waited. You start to see things more clearly when you aren't in the heat of the moment and you haven't got the pressure to perform. You haven't got the burden of performance on your shoulders, the burden of decision making. So it's worth doing. Try it. Just review your trades. Don't spend massive amount of time on it, but just identify. Here's how to do it on advanced mode. Review the trade, P&L, blah, blah. Why did I take the trade? Okay, it was outside of my plan. Here's the advanced thing. What did I think at the time to make me overtrade? And be honest with yourself. Did I feel like I was missing out on that rally? Did I feel like I missed out on that low print and I ended up paying up and just getting caught on the pullback? What was it? So is it FOMO? And you start to see the patterns, revenge, FOMO, boredom, all those things we listed earlier, maybe some others for you. But identifying that is key, and reviewing helps you identify which is your catalyst, your trigger, so you can find a fix for it. So what to log after each session? Again, I think I said that you log your standard performance, but the key is to really know, hey, what exactly is causing me to make this decision to go outside of my plan? It's not obvious at first, but over time it becomes obvious, and then you've shone a light on the issue, and then you can solve for X. And you just come up with a trade review template. I don't need to kind of go over this in detail. A 3-minute reflection of what you really want to review, and important to have why in there. Okay, I said this last time. You guys loved it because it was so valuable. So I'm saying it again. Make those deposits into your confidence bank. Imagine you've got a bank of confidence. You keep depositing it by sticking to the plan, not overtrading. Every time you overtrade, you withdraw. You need that confidence bank because you're going to suffer some drawdown or stagnation at some point. That's the way trading works. And so you need to go, hey, it's fine. Just going to stick to the process and recover from the drawdown. If you have those resources depleted, it's very, very difficult to bring confidence from anywhere because there's nothing in the bank. So every disciplined action you take, deposit, every reckless trade, every overtrading, withdrawal, just every day think, I'm going to put deposits, going to make deposits, because that confidence bank is proportional to the equity in your account, roughly. That's not, but you get the point, right? When that confidence is high, you trade better. And when you trade better, you tend to have better performance. Better performance tends to result in a better equity curve. Okay, so last couple of things here. The 5-trade reset protocol. So when you feel out of control, here's a structured way to regain control. And 5 may be too many for you. Use 1, use a week, whatever, adjust it to suit you. As I say, it's very personal. Stop trading. You feel out of control. Write down what's happening in your mind. What are you thinking? When I'm frustrated, man, I'm so annoyed I missed that move. I'm really annoyed. And this is about being self-aware. And self-awareness is a superpower as a trader. There aren't many superpowers, not a magic strategy. It's not a magic thing. Being self-aware about how your emotions dictating your orders or your assessment of the market is a really, really good thing to train. So write down what's happening mentally. Only take the next 5 trades, 3 trades, 2 trades, whatever it is, with very strict criteria. So you just kind of go, whoa, just pull the leash in a bit, tighten the leash up a little bit. I'm going to take the next 5 trades, very, very strict criteria. Here's my criteria. Do it just to regain some footing, just to, whoa, steady the ship a little bit. It's wobbling. You're out of control. You're overtrading. Whoa, whoa, whoa. Now, you could walk away, but this might just be something you implement before you walk away. And then you review how did I execute and rinse, reset, and repeat as needed. You don't, again, adjust these numbers to suit you, but this just helps you steady the ship. Because the one thing you need to do when you start over trading, it's all very well saying walk away, but it's tough. And maybe it's not needed. Maybe you've made a couple of rough trades and you're like, well, the market's still active, man. There's opportunity here. I don't want to just walk away. Now, fine, if you're super frustrated, super angry, or pounding the desk, get out of there. You're going to be dangerous and you're going to do damage. But if you've made a few over slip ups, just go back and do the reset and go, right, these are my criteria. Next 5 trades have to be, 3 trades have to be really, really, really aligned with exactly what I'm looking for. I can't take anything discretionary here, has to be part of the rules and has to be binary. So, something to think about for you. What's your biggest overtrading challenge? Like, what is it? What triggers it? Is it the boredom? Is it a FOMO? Is it revenge? Is it a little recipe mixture of all of those put together? But there's going to be one big nemesis. And by the way, I found this and I thought this is awesome. I know it's Scooby Doo, right? Now to find out who's been sabotaging your trading. Yes, it's you. Yes, it's you. You're sabotaging your own trading. But the good news is if you're sabotaging, you can fix it, right? And so going back to that question, what's your biggest over trading challenge? Decide what it is, write it down, spend some time, and then solve for that. Go, hey, it's FOMO, it's this, it's whatever it might be. It's revenge trading, it's boredom trading, it's a little bit of both. Okay, how do I fix that? Well, boredom trading, I'm gonna get myself out of the market when it's this. FOMO, I'm gonna be well aware of these conditions that trigger my FOMO. Revenge trading, when I'm down from highs or when I've pulled back X amount intraday, I'm going to be alert, maybe use a timer. You can put very simple structures and rules in place to avoid each of those so they don't become too damaging. Okay, so summary, and I'll take some questions, guys. Overtrading is fueled by emotion, not strategy. You must have a strategy, of course, you must have a plan, but it's all about this. It's all about this. It's how you perceive anything. If you perceive that rally as an opportunity to wait for a pullback, great. If you perceive that rally as a missed opportunity, I must get on it now. Same rally, same pop, you're just framing it differently. If you perceive that drawdown as just a natural cause of my strategy, it's going to have losses, it's going to have wins, a couple of losses. Versus, I hate the way that makes me feel. It's how you frame it in your mind. So triggers, boredom, revenge, FOMO. Think about the impulse filter, 2-minute pause with a timer to stop those reckless trades and some sort of trade limit challenge to help you rewire that discipline. It's so useful that. How many bullets on a day? That's it, simple. And focus on high quality setups over high quantity. I'm going to have a drink in a moment. While I do that, if you guys have any questions, I'll be very glad to take them. Next steps. Let me have a quick drink now. You can read these and I'll go through. Okay. So next steps. Here's some action plan for you before next week. If you'd like to, of course, can't force you to do any of this, but I think it'd be valuable. Honestly, I do. Identify your biggest overtrading trigger. We talked about this one. Set a max trade limit for each trading session. So how many trades we take in the trading day? Because you know that very often once you go over a certain amount, and you know this, right? You look back at your P&L like 50 trades. No wonder rubbish. 3 trades, great. I had a really good day. You know that it very, very rarely does this, your equity curve. You might sometimes trade your way out of a hole, but you don't want to get into that habit, man. You just don't. Use the impulse filter before each trade, thinking about, hey, pause, second, is this the right setup, etc. Review every trade so you can work out what exactly is going on, not just the wins and losses in a general overview, every single trade you take, and start tracking your confidence bank. Am I making a deposit? That's a good thing to put into the discipline tracker, actually, that Google Sheets discipline tracker I mentioned, which you can get at tradersmastermind.com. You can put deposit mine to my confidence bank. And then as you go, you just check off the day and you try and do as many days as you can. And then next month in the next tab, you try and improve that and do that over time. Anyway, okay. Hope that's been some value to you guys. Let me ask some questions now. I've seen some out the corner of my eye coming in. My proof of vision is very tuned in as a trader. I can see blips and flashes on my screen. This time it's not price, it's questions. Next week, we'll be doing overcoming self-doubt and trusting your strategy, because how do you trust your strategy if you don't know how effective it is? Have you got any metrics and performance to lever on or to use? Very difficult. So I help you overcome that self-doubt that we all feel as traders, especially developing traders. It's obviously more prevalent in your early years, and how to trust your strategy when you don't really know if the strategy is effective. So we'll cover a little bit of maybe dialing the strategy, but that's probably going to be next month when we go a little bit more deeper into strategy. But this is a really good one, overcoming self-doubt and trusting your strategy. Um, Okay, let me take a breath. As you can see, I love talking about trading. I love trading. I was very fortunate to have found trading in my early 20s, and that's all I've ever done. So, yes, not many people are lucky enough to find something they love and get to do it every day. So, I do kind of go off on a tangent sometimes, but I know you forgive me because if you find some value from it, helps you be a little bit of a better trader. You put up with a few little tangent here and there. Okay. Okay, so there's a chat and there's a Q&A. I'm going to look at both. I think they're both active, and I'm looking at my other screen here. So that's why I'm looking over here. Great webinar. Thank you for the feedback. Can we ask questions? Yes, you can ask questions, Canal. Questions from outside today's topic. Well, if I've got time, I will, but I'm going to focus on the questions that are related to today's topic. If it's something I think I can answer quickly, well, I can help you. I definitely will, Kunal. If I can't, I think it's more long-winded, then we'll postpone that for you. Okay. So, well, I don't know which order these are coming. I'm going to go through these and those. Davalad, and again, if I butcher your name, I apologize. I just see it, I say it as I see it, and I'm committed to that. Hey, Mark. Did a little watch many videos. Thank you. Where's it gone? Where's that gone? Use the daily 15.5 in the spirit of overtrading. Which of these timeframes do you build areas of business from? Is it the 15-minute chart? Do you trade in and around these areas? Timeframes is my overtrading challenge. Good question, Davalad. Han. And I think the easy answer is if you overtrade, just knock up a time frame. Honestly, the better thing to do is to go. Well, I say better. You find your own groove. I don't never tell another man how he should trade, but use a higher time frame to identify your areas that you may consider doing business in, and then go down to the lower time frame to execute. So let's say you have a 15, you go right. There's a intraday high here. There's a key level here. There's yesterday's low here, which you don't need a 15-minute obviously to see some of those, or the VWAP, but maybe there's your areas to do business. And actually watching price unfold on a 15 creates much less urgency, doesn't it? If you're watching it on a 10 tick, you're like, oh God, it's like, whizzing around like a bloody fruit machine, and it's going to suck you in. So you're better off observing price, I believe, observing price on a 15-minute, higher time frame, hourly, 2 hourly, whatever you want to do. And then as it's coming to an area to do business, if you require to go down to a lower time frame to pull the trigger, let's say you're looking for an engulfing on a 5, or you're looking for a flush on a 1, or you'll take whatever it might be, then go down to the lower time frames, and only then do you start to focus. Because don't forget, if you're constantly watching price tick back and forth, it's like sitting in front of that massive pizza when you're trying to lose weight, right? You're there, you're watching it. No, not yet, not yet, not yet, not yet, not yet. You're there, the 1 minute's flicking around. It's like it's not even anywhere near the level. Whereas if you're on the 15, like, yeah, man, it's fine. Let it come down. It's got more to go. And you're not seeing those candles change so much. So, a summary for that long-winded answer: higher time frame observing, lower time frame if needed for execution. Dirk says the discipline tracker link isn't working from the site. Try again, Dirk. We've had a few people download it today, I believe. So if you go to discipline tracker, I will check it right this second. But in fact, no, I won't. Try it top. If you go to the top, it should open up, and then you put your email in, and then it will redirect you, and then you can download the link. It's only Google Sheets. You have to have a Google account. It's free to have a Google account. Most of you guys have got Gmail, right? Click it. It will make a copy to your Google account. You do what the hell you want with it then. Ruin it if you want. But there are instructions there to help you out. Should hopefully be self-explanatory. If you have any problems, Dirk, email support@tradersmastermind.com, and one of my guys will help you sort it out or send you a copy direct. Absolutely fine with that. Theo, how you doing, buddy? Hope you're well, Mark. Thank you. I am. My worst habit appears to be curve fitting a trade as I see it developing on the chart. Even though it's clearly not part of my plan, I'll be trying your 2-minute clock pre-trade to solve for this next week. Excuse me, guys. I don't have a frog in my throat. Theo, good. Yeah, try that. And honestly, anything that just puts a bit of friction between your process of I see the trade, I click, versus let me just think about it. It's a trade I really want to take. And by the way, imagine, I'm trying to think, I'm going to get a prop here. Let's use this pen. Where are we? Back on here. Imagine this is perfect amount of trades, that's overtrading, that's undertrading. If you are overtrading at the moment, I'd much rather see you swing over to undertrade. This isn't necessarily as you, Theo, because I know there's different approaches, but generally, if you were overtrading, I'd rather see you swing to undertrading and then make the little course correction and calibration back to where you want to be, rather than trying to do little bits at a time. It's better to miss. In other words, it's better to miss trades um, that were in your plan than it is to keep over trading and keep trying to reduce it, if that makes sense. But yeah, Theo, try that, try a timer, try anything like that. Go and steal your wife's egg timer, oven timer. Like, where is it? I'm trying to make a lasagna. Like, I'm trading, I need this. But yeah, it's helpful that. Um, Barati says, hi, would trading strategies also be relevant to long-term investing? There may be, but not really, because we're looking for supply demand imbalances. Barati, really, as short term traders, we're looking for those intraday inefficiencies if you're a day trader. And I think long term investors really just look at the pure fundamentals, right? I think you can maybe time a trade if you had a long term thesis on an asset and you wanted to use some sort of trigger to get in, maybe. But I'm not the man to ask about those. But thank you for your question, Jason. Thank you for sharing all this information. You're welcome, Jason. I'm in the middle of a reset myself after identifying a massive overtrading due to revenge trading issue. Well, that's the first step to fixing it, pal. You've identified exactly what it is, and the revenge is it's horrible. I've applied some of these ideas already, and I'm seeing some improvements. I'm excited to try some of the others you mentioned. Can't wait for next week's webinar. Cheers, pal. I like your optimism, Jason, and I like your the fact that you've identified exactly what the issue is and how you can fix it, right? That's it. Brad Wilkinson says, what's your best, worst over trading you've done during your career? Brad, early days, man, just punt away. No objective whatsoever. Just trading away, trading. And the spreads were ridiculous. The commissions were ridiculous. And I just burned through the little capital I had when I started in a flash with no strategy, punting away, guessing, didn't know any better. Part of the journey there, right? I think once you're burnt like that, you go, hang on, this isn't the way. This isn't the way. Dirk said, I certainly wish I'd started in my 20s. I'm so far behind just getting started at 50. Dirk, the good news is if you are 50, you have a lot more of a calm, maybe you do, I don't know you as a man. I'm assuming there's a little bit less, aggression, anger, and maybe it's testosterone. I don't know. When you're 20s, you want to be right. You've got a big ego. You're the man. Nothing can be right. It's very, very challenging to kind of tame that a little bit and just say, hey, I need to be calm. I need to be this. I think when you're a bit older, you've seen a lot of things in life. You've been through a lot of challenges yourself. You're quite pragmatic about taking knocks. You're quite pragmatic about it not working first, immediately, because you've got a lot of life experience there. Maybe you've done other stuff. So the good news is that you're probably in a calmer position than a young guy in his 20s or so who's desperate to make a massive amount of money very, very quickly and wants it now, has got a big ego. There is that positive. So I don't think it's that much of a it could even be a positive for you I know you think, oh, I haven't got time, but the actual learning of trading doesn't take that much time. The kind of calm confidence that you need to build is what takes time. And, I would say that it's slightly easier as you're older, but it doesn't say everyone's different, right? It's a real blanket statement now. Everyone's different. Fear of losing a profitable trade. How do we overcome that? Kunal, you have to accept it, pal. You're taking risk every trade you take. If you take a trade now, the trade's up, let's use £100, right? Up £100. And you say, I don't want to lose that, and you bank it. What do you do next trade? You're still risking £100 or £50 or £500 or £1,000, whatever you trade with. So, it's not linear like, oh, stop each trade. It's like, this is my risk. I'm taking risk every day. Why do I just want to bank a trade just so I can feel good for the moment when I'm going to be taking risk the very next moment, the very next 5 minutes, the very next 15 minutes? It's just a rewire in your brain and saying, I'm in the risk decision business. I have to make risk-based decisions here. I have to take risk. I can't avoid that. And I have to give money back. I'm never going to get the top tick. If I try and get the top tick, I'm definitely closing too early. I'm just getting better at holding stuff and almost standing in the fire, for want of a better word. It's almost saying, listen, I want to see a trade go all the way up to a profit and come all the way back and stop me out of zero, and get used to that. Get used to it, because the more you get used to the uncomfortable situations, the more comfortable you can be. Mm. Do you know what? I got ravaged by cold coffee the other day, and I thought I've got over it, but it's just ticking back. Maybe it's because I'm ranting on about the markets. Okay, so excuse me if I'm taking slugs of juice. Biswalt says, awesome session. Have you got some indicator which help you stop over trading? Hey, you know, that's quite a good question. I'm not a real indicator fan, but if you use indicators as a filter, they can help you stop over trading. Real rough example, I don't want to go into too much depth here, but let's say you use an RSI or a stochastic or a CCI, or any of those oscillator type indicators. You might say, hey, I only go long when we are between 0 and overbought. So I don't buy in overbought and I don't buy in oversold. I try to trade with the trend when the RSI is up or whatever. Maybe you flip that and say I only trade short when we're overbought, I only trade long when we're oversold, or I only trade long when we're above a moving average. So you can use it as a filter, and that helps you stop over trading, like a dual general rule. Hey, I want to be above VWAP to long only. And so I'm going to trade like that. Max says, just want to say a big thank you for the lesson on trading discipline. Appreciate that, pal. It was intense. Okay, good, I hope. Straight to the point. That's all right. Packed with valuable insights. I really appreciate the no-nonsense approach. It made everything clear and actionable. Looking forward to applying these lessons. Thanks again. I appreciate that, Mac. Thank you. Yeah, I really appreciate that feedback. Okay, good webinar. Thank you. Thank you very much. Thank you very much, Carlos, Lee. Um, uh, I'm going to run through some of these. Do you have a time in mind where the market suits you best? Open, definitely the open. If you're holding trades for longer, you want to review at the close. And if you're trying to not overtrade, maybe you're a day trader, you kind of want to come. If you say, okay, well, I don't know what you trade, right? You might say, I'm trading the DAX in the morning. I want to come back at lunchtime and review the trade. I want to see what European close does. I want to see US open, European close and US close. There might be times of the day that you want to focus stuff on. Junaid says it's working. Thanks for sharing. Good. Rehan says option trading good for day trading. I guess it depends what you're doing, right? I think not as good as taking directional trades purely on the underlying, but then I'm not a huge options guy, so I've got a bias there. But maybe you could find some measure there somewhere. So nice. Says, thanks, Mark. Great stuff. Just watch your stuff on the Trades Mastermind website. Good. Thank you. Theo says, great. Think I do that. Thanks, Mark. Thank you so much. Thank you so much. Guys, I appreciate this feedback. I really do. I know I'm skimming through it, but I genuinely do appreciate it. The last few questions we've got here. I will stay and answer them all. If you have to go, I understand. Don't feel obliged to stay. But if you've got a question, I will try and get around to it. I know you've taken the time to come here, so I'll do my very best to help you guys if I can. I find incorporating fundamentals in my trading make me paralyzed each time I try. What can I do to incorporate this well? Oh, good question, Charles. Very quick answer for you. I think if you incorporate fundamentals to guide you on direction only, and then use technicals to time the trade, e.g., let's say you're bullish on the US stock market, or whatever fundamentals you use, or you're bullish on a particular asset, whatever fundamentals you use, then just only trade from the long side. Then forget what else you're doing and say, well, that just means I believe that over the long term, medium term, we're going up. So I'm just going to trade long. I'm not going to try and trade shorts. I'm only looking for longs intraday. That might be a rough way to use fundamentals to your advantage, just to filter out the side of the trade completely. Biswell says, thanks for the session. Could come at a better time. Today was 20K in profit, now ended at 10K. Okay, Biswell. Well, you know what? If that doesn't feel uncomfortable, I know you said, so I'm assuming it is uncomfortable. That doesn't seem unreasonable to give back half. If it hurts you, then you need to latch that up and say, maybe if I'm up 20, I'm only going to give back 5. But decide beforehand where that drawdown is and say to yourself, hey, how do I feel if I give back half? Horrible, as you've said. So the half's not the answer. How do I feel if I give back 7? or 3/4 or 1/4, sorry, I can stomach it. There's your level. And so you have that build that level, but you run through it in your head how you feel about stuff. For some people, they're happy giving back all the profit unless they're over a certain high water mark. So say you're up using your kind of numbers there. Let's say you're up 5K, you're happy to give it back because you're trying to get to 10. In which case you go up to 5, fine. But once I cross 10, I don't give back more than a quarter or whatever it might be. But just being a bit more structured. It doesn't take much time to do this, but it's worth doing. Lee says, I'm 54, Mark, you're 100% correct. Thank you, Lee. Thanks, Mark. Watch the 15, only going down when to execute. That's right. That's why I think try it out for yourself. Find your own groove, find your own way of approaching this. Thank you. Appreciate this. Lou says, Lou Winthorpe. Yeah, nice. I love that film. Had to give myself a rule of only trading long above, short below a certain moving average. Good stuff today, Mark. Looking forward to next week. Under trading is really my issue. Ooh, you know what? That's an interesting one, Lou. Not many people do that. I can think of a couple, a few on here, hesitation. And that comes a little bit with not trusting the strategy, which, yeah, next week we'll kind of deal with to a certain extent. Thank you, Mark. Appreciate that, Michael. Friday says, thank you for the piece of trading advice. You're very welcome, pal. Charles says, really insightful and practical session. Thank you, thank you, thank you, thank you. Lou Winthorpe says it was an overcorrection from overtrading. Okay, well, you know you can calibrate and find that middle ground. Right, final few questions, guys, and then we will. What has the market been doing? Not a lot. Nasdaq trying to get back to those lows, but choppy in it. Okay. Gary says an excellent topic. Overtrading is one of the most toxic things for traders. Yes, it is, mate. Decades on, I'm just better about this, but still fight it. I think we all do. But the good news is, Gary, you don't have to be perfect. You can still take the odd trade that's outside of the plan and go, man, you know what? I'm not a robot. I probably shouldn't have taken that. But if you limit the damage so it's way less, it's not a big deal. You're never going to be perfect. You're a human being, so give yourself a little bit of um, flexibility and a little bit of understanding, but just try and get most of it capped off. So don't try and be absolutely 100% perfect. Okay. Christoph says, is there a recording of this session? The last session. I think there is, Christoph. If you but Pepperstone deal with all this. So if you've been brought here by Pepperstone, you have signed up through them, just send them an email to send you the recording if they haven't already. They're happy to send you the recording if you signed up for this. Prevail says, I have a 22 account and I have the perfect strategy, the perfect confluence, but I can't take the trade because I'm too afraid. Not to give advice here, but I would go to a demo and just get used to executing. Demo account is very valuable for that. Just getting used to seeing your trade, clicking the button, seeing your trade, clicking the button. And the more you do that, the more you can build the habit of, hey, I see my setup, I pull the trigger, and reduce. And then if you do decide to trade live, just trade very small. I know you've said it's very small, a relatively small account there. So maybe trading is not for you at the moment. You know, I'm not here to tell you must trade, and absolutely not. You know, maybe you go, if you're frightened about trading, just learn and sit on a demo for a bit. There's nothing to fear then. Use demo money and get comfortable with it. Get comfortable. It's a complicated game. I get it, right? I know it's not easy. And don't be afraid to go on demo. You know, because you focus on the money too much, you can't make very good risk-based decisions. But if you stick on demo for a while, you know, just get a feel for it. And then when you're ready to put some skin in the game and you're comfortable, you know, then you step it up a notch. Sydney says the number of trades per day associated with max and min profit or loss per day. I think generally for most traders, more trades equals less profit. After a certain point, right? I think there's a certain point where most people know if they go over that number, it's likely to be a losing day. And it's likely to be because you want to recover from a loss. So you're taking substandard trades. You think that scalping is going to help you in snatching a profit. So one or two good trades a day, there's enough meat on the bone to do that. You know, and if you go into the trading day thinking, what's the play for the day? I think that's going to help you out. Right, I got a few more questions, guys. I think my voice is giving up on me. But I will power through. So you have to forgive me if I'm a little bit croaky, and I've only got a little bit of juice left. Hi, Mark. With overtrading and charts, what do I do if I have so many key levels I feel to trade or fade all of them? That's a great question. These are all great questions, man. Really good questions. Why I still want to answer them because you guys get it. You guys are asking questions that are actually going to help you move forward. And if I can help you, I feel that I will. Okay. Reduce your key levels. When you're drawing your key levels, just only put the major ones on. Limit yourself to 2 or 3, because yeah, you end up, market comes to a key level, you go, what do I want to do with it? Well, I'll sell it, I want to buy it, I'll do nothing, do I hold it? Just limit them to the main areas you might consider doing business. That's a good trick to do. How do you differ between a quality trade and a high quality trade? Lee, I think a quality trade is something that sets up perfectly with all the boxes ticked for you. So maybe have a higher time frame pattern that you say, right, we're breaking out of a bull flag, let's say on a higher time frame. Intraday, I've seen the market run off the open and pull back and hold at the VWAP. You're like, yeah, higher time frame, good rally off the open. Maybe there's been a catalyst from yesterday with some data, VWAP hold, pin bar at VWAP. You start to stack up all the things that are good for you. That's going to be a high quality trade. You still don't know if it's going to win or not, but maybe that's better than we're still in yesterday's range. We're slopping around. We're pulling back to VWAP. So technically that setup is still the same as it was in the other example. But if it's an inside day so far, maybe it's just not quite as good. So it's what attributes of the trade for you make it look as if it's got a really good a good risk reward ratio, a decent asymmetrical risk reward, and you believe it's got a high probability of success. Okay, yeah, welcome, Prevail. Davalad says, high time frame bias like daily, hourly bullish. I may be looking for longs over trading as it pulls back. When it goes long intraday over trading, rang out of bullets. Yeah, learn to use your bullets strategically. Learn to use your bullets strategically. What could be done to cope with forgetting to follow the trade plan when trading or taking a trade? It's just reps. Get your reps in. Just go into each day saying, today I'm going to follow my plan. Make your plan simple. So simplify it a bit so you're not complicated, got reams of damn rules to follow. Just a few simple rules and just get used to sticking to the rules. It is just experience, but start small. Just get a day, 2 days, 3 days, a week, 2 weeks. Then add a bit more complexity to the plan if you need to. And just build slowly and expect yourself to slip up. You're not going to be perfect, but hey, I had a 3-day streak where I stuck to my plan. And on day 4, I went off piece and did my own trades. Okay, I'll start again, day 5 or day 7. Okay, off we go. And just kind of give yourself time and months to kind of fix this problem. Maybe a little off topic. How do you handle your mindset when you're bad off financially? I find that I fall into overtrading pretty easily because of this. I'm here to try and correct you. Thank you for all the info, Mark. Melanie, as tough as it is, if you are thinking about the money, it's very, very difficult to trade well. Because if you're in that, and again, I'm not here to give you financial advice or any of that type of stuff. You make your own decisions, of course. You know this. But if the trade's going well and you're looking at that money going, oh, I could do with that money. I want it. I want that money. You're not going to trade based on the fact the trade may have more to go. You're going to trade based on the fact that I don't want to lose that few £100 or £3,000 on the trade there. Very, very difficult. So, yeah, just bear that in mind. I think the demo again, maybe get yourself more dialed in. Try and trade very, very small if you feel comfortable. But I think that if trading's very risky, man. We've said this at the beginning. It is super risky, and if the money you can't afford to lose the money, then I know I hate to say, but probably shouldn't be trading until you're in a better position. I know it's not the answer you wanted, but you need to be free. Your mind needs to be free. You need to say, this is the capital I'm risking. I'm happy to risk it. I'm comfortable with the risk. I understand the risk. And now we go. Let's see how we get on. Let's risk a small amount. Let's take these trades. Let's see how I get on. If you're holding it tightly and you don't want to, it's very, very difficult. And it's a bad position to be in, I think, Melanie. I think I've covered everybody here. Last 3. Recording will be sent to you, Adnan. So that should be sent to you automatically. Dennis says, I'm one of those who do revenge trading and over trading also. Thanks for the insight and how to navigate them. Welcome, Dennis. Hopefully it helps you. Rayhan says, can we make long-term profits day trading or do we need to switch? You find out what's comfortable for you, Rayhan. The only thing I'll say here is day trading can encourage over trading, right? And if you find yourself over trading because you are day trading, maybe go up a time frame so you can calm the whole flow. because you're day trading, scalping. You see, I've got to get in, get out, shoots off. Oh, I missed it. Right. And you get angry, revenge. If you're higher time frame trading, you've got time, right? You're on a daily, you're on a 4 hourly. You can spend a few minutes looking at it. So if you find that you're getting pushed into taking trades, that you perhaps are rushing, then maybe go up a time frame. You have to stay there. By the way, if you make changes now to how you trade and how you approach the markets, that's not permanent. You can always come back to different ways, but sometimes you have to take a side step or a back step to fix something before you can move forward. So if you want to be a day trader, if you like day trading, you believe you have edge there, but you're just over trading, step up a time frame, trade a little on the higher time frame, slow things down, get calm and comfortable, and then maybe increase or decrease the time frame and go back to where you were before. You might find you don't want to. Okay, this is working for me. I don't need to. But nothing's permanent. You don't have to stamp your flag in the ground and say, right, I'm tattooing on my arm, I'm a day trader of DAX and that's it. You can be flexible. And I think it's very useful to use the flexibility in trading as a tool to help you overcome some of these challenges, to get yourself to the next station. Then you can go back and go, right, I need to revisit this. Now I'll fix this, and one kind of step at a time. All right. I think I've covered everything, ladies and gents. Thank you so much for your attention today. I hope you found it valuable. Back again, same time next week. So 6 p.m. UK time, next Tuesday, whatever date that is. But Pepperstone will send you an email about that. Thank you for all your wonderful questions. Very thoughtful, great questions. What a great bunch. I'd love to see you here again next week. Take care, guys. I will drink the rest of this juice and try and get rid of this little tickle in my throat. But I love talking about trading. I like trading. So, hey, it's all good. See you next week, guys. Bye bye.